boy Wanele, and I'm back again with another one. So today we're just going to look at the descending channel. As you can see here on the screen, we have different types of patterns, but today we're just going to focus on this one, which is a descending channel. The reason for that is because this is the channel that I used to take a trade last week. As you can see, this is the trade that I took. I took it with 0.01. It's not a big lot size, but we're not focusing on the lot size here. We're focusing on the strategy and the reason behind this trade, right? Okay, cool. Let's go to the real market right now. So this is a real chart. I'm going to use the US CAD because it's the trade that I took last week. All right. The reason that I like to take the descending channel is because you can get more than one trade on one descending channel. Okay, so how can you take advantage on a descending channel? Let's say you get a trend that is going up like that, and it comes down to this point, it goes up again, it bounces here, and it comes down like that. So what you have to do is, just going to stop here at this point. What you have to do is, you see you already got 2 points. This is point number 1, this is point number 2. So once you've got 2 points here that are going on a descending channel, what you need to do is you have to connect a trend line on these tops. You connect your trend line like that, and then what you have to do now, you take this trend line that you connected, you copy it, you just drag it, you put it at the lower low. You put it on this lower low. Why are you doing that? It's because most of the time, not 100%, but most of the time, the market will always come down to this trend line, bounce back, go up again to the same trend line, bounce back, and come down again to the same trend line. So the market will be moving within these two trend lines. Markets will be moving within these two trend lines up until it decides to break down or to break high. Okay, cool. I hope you understand that, right? So with this, as you can see here, you can get more than one trade on one descending channel. Your first trade will be here. You can take this trade up because you already know it's coming here, and then you can take another trade that is coming down to this level, and you can also take your profits and take another trade that is going up to that level, and you can take another one coming down again. So you already got 4 trades on one descending channel. Mind you, this is a 4-hour time frame, or it's a 1-hour time frame. All right, so let's jump into a real market. Okay, before we can jump, I just want to mention this. So every time, you don't just take a trade when it bounces on this level, on these top trend lines, on these yellow trend lines. You don't just take a trade there. What you have to do is, every time when it comes, let's say the market comes to this level, every time when it comes here, you need to drop down to a lower time frame. If this is a 1-hour time frame, you need to drop down to a lower time frame. It's either 15 minutes or 5 minutes or 1 minute, it depends. You go down to a lower time frame. When you go down to a lower time frame, you're gonna look for the first impulsive move and the correction like that, and what you have to do, you take the second impulsive move. I always take the second impulsive move because it's more it's more safer than to take than to just take a trade when it bounces here. You can take it if you are confident, but to be on the safe side, you must always wait for the first impulsive move, wait for the correction, and take a second impulsive. All right, cool. Think that's clear enough. Now what we have to do is to jump into a real market. All right, this is US CAD. US CAD. It's the same trade here. It's a US CAD. I took this trade here with the sell. It's still running. It's still running over the weekend. All right. Okay, let me explain my thoughts behind this trade. So when I saw this trade, the market was here. Let me play back. Let me play. All right. Okay, cool. When I saw this trade, the market was here. The market was here. Right. I'm not going to take away this because that's where I took this trade. I want to see when I took this trade. All right. So what happened here is I saw this bounce, I saw the second one, and then I saw the third one. So we already got 3 bounce here. It bounced here, it bounced there, it bounced there. And then what I did is I connected my trend line. I connected this trend line here. I drew this trend line connecting these 3 points with the hope that it's going to bounce here and come up like that. Cool. All right, it was already on this point, so it already bounced. And then after I drew this trend line, I had to copy this trend line, take the same trend line, take it and put it here. Why I had to put it here? I had to put it here because of this high. This was the second high after this. So I had to connect it with this one with the hope that it's going to push up, bounce on this level, come down here. Okay, cool. All right. Okay, put this one here. And then let's play this. Okay, it's moving so fast, but it's fine. So when it came to this level, I had to drop down to a lower time frame. Now let's drop down to a lower time frame. I went to 15 minutes to 5 minute time frame. On 5 minute time frame, I saw it broke this, but it came back down with an impulsive move. So you can see it came down with an impulsive move. It went up, like gave me a correction. After this correction, it pushed down again. So as you can see already, we've got the first impulsive move and a correction. This is the same thing as this. Impulsive, correction, another impulsive. Cool. And then I took this trade here. As you can see, this is where I took it. I took this trade, went back to 1 hour, with the hope that it's going to continue going down. But as you can see, it didn't push down. It came down and bounced on this trend line. It came down and bounced on this trend line because it's bounced there, it bounced there, and then it bounced on this trend line. It pushed up again. but I didn't take this trade out. You know why? The reason why I didn't take this trade out, it's because I realized that okay, it bounced on this one, probably it's gonna push up again, and then I had to take the same trend line, just expand it just a little bit, put it up here on this high, because this one has been broken. Now we've got the second one. And the reason why I was so confident with this trade, it's because I realized that, all right, if it bounced here, which means this trend line is holding, because it's been holding along. And if you're looking at this thing, you can see it's like a correction, and then push up, comes here, and then come back down as I predicted initially. All right, cool. Let's go back to 1 hour and play. And then it bounced here, which means this trend line is holding. Came down, currently this is where we are. We currently on this correction. We already went down, we are on this correction. Most probably what is going to happen is, after this correction is going to push down to this lower trend line. Probably when it touches this trend line, it's going to push up again to this high. So with the hope that when it comes here on this low, it's going to bounce and push up, and then when it bounces here, I am going to take another trade pushing this thing up. But on this correction here, now when the market opens, this is what I'll do. When the market opens, I will wait for a break of this trend line and put another order. Put my stop loss, push down like that. This is what I'll wait for when the market opens. Alright guys, I hope this makes sense. If you like this and you like my channel, please make sure that you subscribe and you share this video with one of your friends. And also please put down on a comment below on what is it that you like me to show, what is it that you like me to improve, for me to help you understand this forex trading. Cheers guys, enjoy your week, have a productive week, catch you on the next one.